Well, it's the G20 booster, right, for D Street, which remains to be seen. You're watching the market, by the way, right here on ET Now. And a couple of key pointers there. A, that India-West Asia-Europe corridor has opened. The fact that African Union is going to be now part of G21. And there's a global biofuel alliance that the nations have actually formed for themselves. And I think the three standout features, Nikunj, remain that members have reached a consensus. There's been, no sort of quarrying in that sense. The targeting of tripling renewables capacity, and PM Modi has attended 15 bilateral successful meetings.
See, an event of this grand stature, the world has never seen before, and I don't think the world will see before. Now, we live in a very complex world, and in this kind of a complex world where you have climate crisis, you are suffering because of what the COVID aftershocks are. There's a huge disparity in the way how the global economies are moving. The fact that the G20 group of nations, not 20 but 21 now, they were able to come to some kind of a consensus on the Russia-Ukraine war front. I think that in a sense is victory in itself. But what it means, it just means that the emerging markets now will be the moderators, which is from India to Brazil. That's how the G20 or G21 presidency is moving. Specifically for India, it's a victory for India's diplomacy. It's a huge victory in a sense that Indian markets or Indian government was able to, in the 11th hour, 59th minute, there was some consensus which was formed, at least on the political front, at least on the Russia-Ukraine war front. So in terms of positioning, in terms of narrative, in terms of what India has achieved, and in terms of the global attention, I get the G20 has really taken India's positioning right on the top of the pedestal.
Absolutely. A lot of standout features as well that were declared, and now we hand over the baton to Brazil. But that aside, let's move right on then and put the spotlight on the equity markets, because last week we did manage to see gains that we tracked for 6 consecutive weeks on the trot. Even you had the critical mark of 19,800 that was breached on the upside. Broader indices continued to outperform, and while defensives took a bit of a backseat, it was rate sensitives at the top of the charts. It was the highest weekly gain, incidentally, that we saw since the 2nd of July. And Nikunj, all sectors really contributed with a nice 2% gain. Of course, the broader market saw a gain in excess of 3%.
No, see, what was the highlight for the week gone by? The highlight for the week gone by in my book was that pacey comeback in Nifty. Frankly, frankly, Nifty was the story. It was backed by comeback in banks. It was backed by comeback, let's say, in some of the heavyweights. So from a slumber to action, is that what markets are indicating, and is that where benchmark indices are likely to move? So the story for the week gone by was centered around Nifty. We can endlessly talk about, okay, markets are due for correction. We can get into the narrative that in the mid and the small cap stocks, things are looking expensive. But that narrative is just not something which is at play. What is important for me, which is at play, is that we are now marching towards the new high, just 200 points away from a new high, 20,200 points away. So while the global markets last week have taken a back seat, FIs are selling, but not only benchmark indices have cut out, we are sitting almost at a new high. We may hit a new high this week, and the activity in the small and the mid cap stock, it continues. So it's like a perfect gel, so to speak, where you're getting pretty much what you want, and the bearish narrative is just not making any sense right now.
Yeah, and just drawing into what is going to be in focus in the markets today, and just drawing down from the takeaways of the G20 meet, that mega economic corridor which is open, and I guess the sensitive sectors to that are the ones which are going to see some share, right? I mean, it includes data, rail, electricity, hydrogen pipeline projects.
These are very long gestation, agreements.
Sure.
So in terms of, yes, there is a new trade route, there is a new bilateral agreement on data that will change the future decision making. But markets, what happens in the short term, you start preempting what will happen in the long term. And you may actually see more renewed action in some of the railway stocks, freight stocks. Data, I don't think there is anything real which you can pick up, excepting few companies which have entered on data centers. But yes, I mean, the way how the freight and the logistics would move in coming years versus how they've moved, I think it would be entirely different. I mean, it's like saying that when Silk Route was discovered, it changed the rate, it changed the trade. When the sea route, spice route was discovered, it changed the entire logistics and the lay of the world. Sure. This is a route where if it goes through the way it has been planned, it's just going to change the bilateral trade and change the trade orientation of the world. But that will take years. That will take some time. Meanwhile, in the market today, since there is momentum in railway, freight, and some of the logistics stocks, the price action could be captured today, which frankly, I mean, you should not chase them today. That's my limited point, because the markets will capture the price action today for something which will be a reality, not next year, but not next to next year, but in 3 to 5 years minimum.